Hello, I'm David Cassidy with the Daily Update today, Tuesday the 14th of April. Although it's the start of a new week in the UK and Europe after the long Easter weekend, US markets were open yesterday, and after last week's biggest gain since 1974, Wall Street gave back some of those gains, with the Dow Jones losing 1.39% and the S&P 500 index down 1.01%. Global equity markets are clearly on edge ahead of the quarterly reporting season, which kicks off later today with both JP Morgan and Wells Fargo, and they are likely to react to the harsh realities of the coronavirus outbreak with an increase in provisions for bad debts, given that bankruptcies and unemployment have jumped dramatically due to the lockdowns. Additionally, until we start to see the current lockdowns lifted, companies will only be able to highlight the uncertainty rather than the certainty in the outlook for this year's sales and profits. Also, later today, we get the IMF's World Economic Outlook, which will undoubtedly prove to be wrong, as they often are at the best times, given that no one knows how long the current lockdowns will continue. However, as we've previously stated, government and central bank stimulus measures will help to mitigate the economic damage. But until we finally get to the other side of this horrible coronavirus outbreak, equity market volatility will remain elevated as equity markets hate uncertainty. Helping sentiment this morning is some better than expected economic data from China after China's PMI, Purchasing Managers Index data, came in much stronger than expected last month. Today's import and export data highlights both how quickly China, the world's second largest economy, is restarting after its own lockdown, coupled with the strength of Asia given the lockdowns in the UK, US and Europe. Chinese exports fell just 6.6% in March, compared with expectations of a fall of nearly 14%, while imports declined just 0.9% against an estimated 9.8% drop.